What's up, YouTube? This is the Working Investor. In this video, we're going to talk about this market going crazy up, 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 and up. We're going to talk about good entry points to get into positions, and we're going to talk about some trades that I'm doing today. So, of course, the market is just roaring because the Fed cut interest rate by 0.5% or 50 basis points, and it was expected to cut it by 25 basis points. We all know that. We all know that. And everything got cheaper. The cost of doing business got cheaper. Small caps, tech, things, growth companies are able to leverage cheaper money now. I even got a notification from Robinhood saying that the interest rates on margin dropped by respectively by 50 basis points. It used to be under $50,000 in margin was 6.75%. Now it's going to be, I think they said effective pretty soon, 6.25%. It's going to be effective. So there are some trades that I'm doing today. One thing is I won't talk too much. You guys are not really interested in options, so I did roll out triple leverage, triple Q. I won't a triple leverage, not triple Q. Russell 2000. I misspoke. I rolled it up and out, and I received $125 in credit. But let's talk about right now something called core number compounding. This is a term by the Oracle. I'll just say the Oracle because he no longer has a YouTube channel called YieldMax TV. And this is a very powerful strategy. And when there is dashboard money, you don't just watch and eyeball your account go up and down, because there's money to be made when the market's down. There's money to be made when the market's up. Be fearful when others are greedy, and be greedy when others are fearful. So in Amazon, my allocation is $5,000. I'm over 200 overweight in my allocation. I can watch this money in my account, dashboard money, unrealized gain, and do nothing, or I can cut some off the top. So I will cut some off the top. So rip off the top means I'm going to sell about 10 shares. I don't like to do dollars, I like to do shares. So we will do sell in shares. We'll do 10 shares. And yes, we're going to rip off around almost $200 off Amazon, off AMZ. There we go. I know that some people freak out because they're like, oh my God, you're cannibalizing your dividend payer. Like, don't kill the golden goose. The thing is that if you look at the amount of dividends you would receive in Amazon, the amount of dividends I would receive in Amazon is, let's say, 40% annualized off $200. So, 40% off $100 is $40, so I guess around $80. So, and then you have to divide it by 12. So let's say we divide it by 10, it's $8 a month. I just locked in $200 in gains. So, and I can always buy back if AMZ goes down. But I already took almost $200 off the table. I've de-risked $200 off the table. I've already ripped off from Phoebe. Now, again, ripping means selling into pumps. When the market goes up, you sell and you de-risk. When you sell and put the up side to the side, you've taken risk off. You put it to the side, and now you're hedging yourself. If the market goes down, now you got some dry powder to go back in. I've already ripped off in Phoebe. Let's talk about one of the objectives in the video is to think about, you have a lot of these companies that are proxies of an index. You have a lot of companies, like, let's say, for example, BITO, right? BITO is Bitcoin futures. So when people trade BITO, let's say, just for example, people look at the range of the underlier, of the actual proxy, right? Because this is a proxy of Bitcoin. So they look at, oh, here's the low, here's the high. That's okay, but what's even better is to look at the price of Bitcoin and look at the range if Bitcoin is overbought or oversold, and then make decisions what to do with BITO. And if, for example, I have right now triple leverage Russell 2000, of course, it trades within a range, right? You could see the range that it trades, like down here and up here. But it's also important to look at what underlying it's going based off. And this is based off like the Russell 2000. So it's a more correct way. Another way to look at it is that you want to look at let's say IWM, and look at, when IWM is less than 200, it seems to be on the lower end, and it's around 220, 224, it seems to be on the higher end of things. So right now, like if you were looking for entry exit points, I like to look at the underlying. This is very important because I do have a position in RDTE, which is the Round Hole Russell 2000, synthetic cover call ETF. And I'm trying to find a darn entry point to get in here because I want to buy some more. But the thing is that looking, as you guys just saw, IWM, which is the Russell 2000 index, you see it's kind of on the higher end of the spectrum. So I'm fearful because to get into this entry point, I mean, you never know how high it can go, but at this second, I don't know if it's the best time. I'm kind of waiting for the ex-dividend date. And I mentioned in my other videos that RDTE basically has not paid a dividend yet. They're going to pay a dividend the 27th of September, which is going to be a dividend based on about 2.5 weeks worth of training. So that's going to be anticipated a really, really juicy dividend. I anticipate it'll be very, very juicy, hefty, but it's not representative of probably its average dividend payout, I would imagine, because it's based off 2.5 weeks of potential energy that it's going to be expending into kinetic energy in the terms of payment, right? But you really want to see a few weeks out, maybe a few months out, see the history month after week after week after week. Then you get a better idea of what the average expected payout would be roughly. So, but because I'm expecting a big chunky dividend, and also to add to my point, the Russell has been on an uptrend recently. So it captured a lot of upside gain, the RDTE. So it's representative of lots of gain in the index and also lots of premium that I received. So because I'm expected a large dividend payout, I personally feel that on ex-dividend date, this will drop more than normal relative to other weeks. So I may find a good entry point there. But you never know; the market could keep going up. So there's a risk in each, whichever way you go. You just have to make your own choices. So yeah, that's what I wanted to talk about. You want to use the actual proxy, but you also want to look at the actual index of the proxy trends itself to make ideas where you are in the bigger picture, bigger scope of things. So yeah, and then we spoke about ripping. Let me see if I see anything else ripping. So Facebook, we're about 200. Nvidia dips, it's fine. Tesla seems a little bit right, but if you look at the total picture of Tesla and crash, they're about just around 5,000. Coney and Fiat is still underweight. So yeah, Ulti, I did buy. Ulti has dropped in price because it's ex-dividend day today. It's a special day to buy in if you want to buy in. You could see here this drop. This drop is because it's paying out 98 cents in premium. So it went from 11.44. So you expect it to drop almost $1 pretty much, and it's appropriate for the amount of dividend that it's about to pay out. So I did buy 40 shares because I was underweight with my $10,000 goal, and I may buy a little more. And the dividend payout is going to be close to 900 based on the, I'm not sure they show you here what it's going to be. It's not showing, but it's going to be close to 900 because 98 cents a share, 900 shares, so close to $900. So I have some powder I can start getting into the dividends. Another point I wanted to bring up is a lot of people wait until they actually get paid the dividends and then they're able to reinvest. But a lot of times when you get paid the dividends, that's after ex-dividend date. So it's sometimes, I know that the income architect speaks about this, Brad speaks about this, that he tends to try to, if he wants to buy in, he'll calculate how much dividends he'll be receiving on the payout day, and he'll upfront the payment to buy in on the ex-dividend date earlier, so you get in at a better price. So you don't have to wait until you get the funds. Anyway, I hope you guys enjoyed. This is the Working Investor over and out. Have a wonderful day.